What's up, guys? Welcome back to another episode of Behind the Facade. And what on earth is going on with the crypto market? The world of crypto has basically experienced its Lehman moment. And we're going to talk about that. FTX, WTF, what's going on there? Also, I would like to get into Twitter and talk about what's going on there, but I don't think I'm going to get a chance in this particular episode. There is so much going on in the tech and crypto space that's really, it's just hard to kind of keep up with it, the speed and the pace at which it's all changing. So I actually remember really, really well 2008 and the Lehman Brothers collapse. I'll never forget it because it had such ramifications for the market. But I can remember seeing Lehman Brothers was this huge bank based in London and New York and all over the world, but they had a huge big office in Canary Wharf in London. And I can remember these scenes on Sky News playing out, and you had all these staff members walking out on the street holding boxes with their personal belongings. And that's it. They had just lost their jobs. These were masters of the universe, kind of traders that would earn $1 million a year and all this. And literally, that's it. You've lost your job. You're out on the street. What happened next, I don't need to really tell you guys. The global financial crisis enveloped the world thereafter. And what it was that caused all of that it's the cascade or the domino effect. And that is that everybody is kind of like standing on the edge and, they're all doing really, really well as long as everybody stands on the edge. But the moment somebody falls over the edge or gets caught or pushes the envelope too far, then that's it. They drag everybody else down with them. And that's what happened with Lehman Brothers. As soon as it collapsed, it went bankrupt with billions in debt. And the counterparties that had lent them money, obviously then went under themselves. And the people who had lent money to those guys started to go under as well. And it was just this kind of cascading, just keeps on getting worse and worse. And as soon as one is gone, it drags down the next. And what the impact that had was it froze the financial markets completely. And you couldn't get loans, you couldn't get mortgages, you couldn't get anything. And so what actually started to happen then is the broader economy, whilst those are all the banks and the financial houses and stuff getting under trouble, you would kind of think, well, I run a normal business on the main street. I shouldn't be impacted, should I? But the reality is the banks were impacted. And so they withdrew any kind of overdraft, they withdrew credit cards, they withdrew credit terms, everything like that was pulled. And I know people that had good, profitable businesses that basically went into a cash flow crisis because they couldn't get access to their overdraft, their banking overdraft that they would typically use. Every month they'd go into the red, and then by the end of the month they get paid and they'd be out of the red. Those were frozen. Suddenly they have a cash crisis. So this is a property. This is a property podcast. You come here for my input on property investment, things like that. I'm not a crypto guy, but I have to say we have to talk about that today because there's various lessons to be learned from this, but also I do think we're going to feel the impact of this. Maybe not in a big way, but we are definitely going to feel the impact of this. And I don't think the market is done yet. The market is only just beginning to kind of deal with the fact that this company FTX has gone under. And I think we're going to see an awful lot more on this whole topic over the next couple of weeks and months. And so without further ado, let's get into today's episode. You are listening to Behind the Facade, and I'm your host, Gavin J. Gallagher. On this podcast, I explore the mental and emotional game often playing out subconsciously both in your mind and the mind of everyone else in the real estate or property investment market. The key to success in this game is to master your mindset and your behavior, to take control of your thoughts, your emotions, and most importantly, your ego. Welcome to the show. All right, guys, before I get started, one quick little update, and that is I'm going to just say the word Movember. All right, we're into November, and those of you watching the YouTube will have the benefit of this little close-up on my mustache that I am growing for charity. Now, it's a charity fundraiser. The link is below in the show notes in the video description. But as you probably know, you've probably seen Movember before. Movember is the month of November. You grow a mustache. It's all for charity. And in particular, men's health is the charity. And in particular, I'm focused on mental health, men's mental health, and in particular, suicide prevention. Now, a couple of friends and relatives have taken their own lives over the years, stress-related, incidents and things like that. And it is it's devastating to a family. I've seen it very close at hand, and I've seen the impact that it's had, and it's not pretty. And it's something that we just have to try and do better. And one of the big reasons that I talk about this is because, I've seen it myself. When you go through financial difficulties, you feel like the whole world is opening up and it's going to swallow you whole. But the worst thing about it is that guys, men in particular, as opposed to women, men are supposed to have this kind of tough exterior and they can deal with stuff. And it's like weakness to admit that you're suffering from mental health. And so a lot of guys will bottle it up, say nothing, and it becomes too much for them. And so there's a bit of a stigma around admitting that you need help. And I'm just here to tell you, like, guys, if you're feeling it, go and seek help. There's no stigma at all. With the benefit of hindsight, you look back and you kind of say, you know what doesn't kill you makes you stronger. But you really do need to ask for help if you are suffering in any shape or form. Now, this mustache, have to admit, absolutely hate it. My wife hates it. Every time I go to eat, I can feel it like bristling on my food and stuff like that. So you have the next couple of weeks to see me wearing it. And on the 30th of November, that evening, it's gone. You won't see it anymore. So go and have a look at the video if you want to go and see the close-up because I look ridiculous. Somebody said I'm looking like Tom Selleck from Magnum PI. I'm not so sure. Right, let's get into the main topic here, and that is the crypto meltdown. And really, where do I begin? It's hard to actually cover it because so much has happened this year and so much has happened in the last week alone. If you remember way back at the beginning of the year, the crypto was, or if we go back 12 months, crypto, in particular Bitcoin, was valued at 66,000 US dollars. And then it started to go through a bit of a decline and various things started to happen. And it ended up very quickly losing about 70% of its value and being valued down around 18 to 20,000. Now, that's where it's been sitting for months. And what happened then that started to put it under more and more pressure. It fell from 60 down to 40, then down to 30. Various events started to take place that really knocked the confidence of the market. And the first one that I'm kind of thinking of was back in May when a crypto coin called Terra Luna basically collapsed. And Terra Luna was supposed to be this stable coin where the value of it would stay the same. But something happened. I'm not going to go into all the detail, but basically it lost pretty much 99.9% of its value overnight. And a huge number of people had a lot of money tied up in it, lost everything. Not long after that, this is one of the problems with this kind of market, is that they're all interconnected and interlinked, and guys that have got investments in one, if that goes down, it can trigger margin calls that makes you have to force you to sell other things to kind of free up capital to pay off your loans and stuff. And so it has this domino effect. And not long after Terra Luna was gone, Celsius announced that they were freezing all deposits or all withdrawals of cash from their fund. Then, not long after that, Three Arrows Capital, which is a crypto venture fund, they went under. And then who comes in to save the day? Only Samuel Bankman Fried. And he swooped in with a $240 million loan to save BlockFi from going under. And he gave an additional $200 million loan to Voyager. And the reason that he had to do this was because these companies were going through a liquidity crisis. And I'm going to go into a little bit more detail as to liquidity and insolvency and all this in a little bit, but let's just keep going on this for a moment. So Samuel Bankman Fried, considered by the whole crypto industry to be a savior and effectively being compared with J.P. Morgan, who is the banker from back in the 1930s, who saved the day back around the time of the big US Depression. And everyone is calling him a genius. Samuel Bankman Fried, SBF, are the initials that he goes by, and everyone's calling him this like genius. And he went and this Warren Buffett giving pledge. Warren Buffett and Bill Gates have kind of said that they are going to give 100% of their fortune away, and it's going to be given to philanthropy and charity and all that. And he has gone and signed the giving pledge, this guy SBF. And he drives a Toyota. Like he's worth billions, but he doesn't care. He drives a Toyota. He's a nerd. He's a geek. He wears runners. He has this like big mop of hair, and he really doesn't care about money. So what does that mean for everybody? Well, it means he mustn't be motivated by greed, and therefore you can trust him. Isn't that right? Who is Samuel Bankman Fried? Well, SBF graduated from MIT, which is the Massachusetts Institute of Technology. He graduated in 2014 with a physics degree, and he started working at an investment firm called Jane Street. Now, he was what's known as a quant trader, and that is where if anyone has seen that movie, The Big Short, not The Big Short, The Margin Call, with Kevin Spacey and a couple of other guys, there's a scene in it where the guy's explaining what he does, and he's like a rocket engineer or something like that. And these guys, they are mathematical geniuses. They know how to count, calculate, and all this kind of stuff in their head. Very, very smart people. And he's one of those people. If he's a quant trader, then he's very, very good at that kind of stuff. Anyway, it didn't take him long to figure out that you can make a lot of money doing this. So he left Jane Street to set up a company called Alameda Research. That's his trading firm. And what he did was, and he's famous for this, is he noticed a gap in the market, in the Bitcoin market. And what he found was that if you're buying Bitcoin in the US exchanges, you could buy it at, say, $10 or let's say $10,000. But what he found was that he could go to a Japanese Bitcoin fund and he could sell the exact same Bitcoin in Japan for 11,000. So he'd make a 10% profit instantly and with zero risk. He was basically buying on one exchange, selling on the other in the same moment and making 10%. So in the matter of months, he made $20 million doing this. So clearly knew what he was doing, smart guy. And this kind of light bulb went off in his head and he said, whoa, this crypto stuff is insane. I can make a lot of money at this. So 2019, he establishes FTX. Now that is an exchange, a crypto exchange. And having come from Jane Street and seeing how this kind of the mainstream banking system works, you have these finance houses and these exchanges, and what they do is they provide all of these products that investors can come along and buy. And I've talked before in this podcast about my experience with CFDs, that's contracts for difference. And if I put $1,000 or €1,000 or £1,000 into an account, I can leverage that at 10x, and I can go and buy 10,000 worth of shares. And if I double my money on the 10x, I've made, you go from 10,000 to 20,000, you've made $10,000 profit, but you only put 1,000 in. So you've made a 10x return. So it's a really, really great way to magnify your returns. So he created a lot of these products around the crypto space, and he allowed margin like that. So 3x margin, 10x margin. He allowed you to short them, so you could basically go and say, right, I want to buy Bitcoin, but instead of buying Bitcoin at $16,000 for one, you would put in, $2,000 or $3,000, and you would be able to buy $20,000 worth of Bitcoin. And so you could go out there and magnify your returns much, much more. And you could also sell on, if you thought that Bitcoin or Ethereum or any of those kind of crypto funds, if you thought that they were going to fall in value, you could bet against them falling. So you could actually take a short position. So he did all of this. It was a very smart idea. A lot of people wanted to go and play these kind of games with crypto because crypto is so much more volatile. So the returns are outsized. So are the losses. But a lot of people, they want the gains. They don't really care about the losses too much. This FTX platform became massive. very, very quickly with all of this stuff on offer. And early investors started to kind of pile in, and some of them were these big finance sort of companies like hedge funds and stuff. And in particular, what was interesting, I found, was that a crypto exchange, the largest crypto exchange called Binance, they also invested in FTX. And Binance is run by a guy that goes by this nickname CZ. I think he's a Chinese guy, and so his initials are CZ. Now you should remember that name because it's going to come up in a little bit. Fast forward to today, or to 2022, we'll say, an SBF, Samuel, is being treated like some sort of a messiah, all right? With having signed the giving pledge, he is now worth $16 billion at the age of 30. So he is up there with Mark Zuckerberg in terms of wealth. And literally, you've got celebrities endorsing him. You've got magazines like Forbes saying that, he's the smartest man in the room and all this kind of stuff. You have celebrities and sports stars doing advertisements for FTX saying, you got to do it. You got to sign up. It's amazing and all this kind of stuff. And FTX can afford to pay millions to these guys. That should be a red flag straight away to those of you who are listening. Now, in addition to that, all the YouTube finance kind of speakers that I kind of follow, and a lot of them that talk about crypto and a lot of them talk about stocks and stuff, they were all getting tapped up by FTX to go and promote the business on their channels. And by all accounts, they were being paid hundreds of thousands, if not millions, to actually do this. And so, that immediately to me is a big red flag. And why is it? Because it's, Bernie Madoff is a guy that, if you don't know that name, go and check it out, because when you Google that name, you'll see it's associated with a Ponzi scheme, one of the most successful Ponzi schemes in the last, 20 years. And what he actually ended up the chairman of the Security Exchange Commission, which is the company, or which is the organization, the government organization that actually goes and checks for fraud and stuff. And meanwhile, he was the biggest fraudster of them all. He had created this Ponzi scheme. And the way a Ponzi scheme works is you get customers, new customers in, give you money, and they give you money because you're promising these amazing returns. And how do you promise the amazing returns? Well, you give the guys that are already in there their returns, and they go out then and say, it's amazing, I've just made all this money. So let's say, for example, I was to offer you 10% on your money return on your investment. Give me 10,000, I'll give you 11,000 at the end of the year. You sort of say, that's a great deal, I'll go and do that, because at the moment, interest rates are very, very low. And so how do I fund that though? Am I making it from property profits? Or am I getting new people in who are giving me 10,000 and I'm taking 1,000 from them and I'm giving them back I'm giving the profit to the guy that put the money in earlier. So in order for a Ponzi scheme to work, you have to keep on bringing in new customers all the time. New customers, new customers, new customers. They feed the profits that you're paying to the old customers. When the old customers make their profits, they go out and start singing the praises of what a great platform it is. I'm making all this money. You should definitely join. And of course, they can go and pay for all of this money going into sports star celebrities and stuff like that, endorsing the platform. Now, SBF was asked to speak to the US Congress, no less. And he actually went up and sat with them as the stable genius that he is. And he was in a pair of runners and shorts, sitting there speaking to these guys. And he was explaining how crypto was so well controlled and so transparent that what happened in 2008 with the mainstream banks could never happen to the crypto industry, because it's all in the blockchain and you can see everything. You cannot make this shit up. It's unbelievable. The guy was out there saying all this, and then what has happened? Well, 2 weeks ago, Coinbase, CoinDesk, which is kind of a news thing on crypto, they published an article saying that FTX, that the 14 billion in assets that it said it had, that a huge amount of that was actually made up of its own tokens. And so that would be like me saying, guys, I'm worth 200 million. And meanwhile, 150 million of what I'm saying is my net worth are shares in Gavin Gallagher Limited. And I've just put a value on those shares that I decide myself. It's not like there's no money in the account. It's just I'm valuing my own shares myself. And anyway, this is what he was doing by all accounts. And a couple of days later, CZ, the guy from Binance that I mentioned earlier, he decides that he wants to get out. He has 23 million FTX tokens. They're called FTTs because of the tokens. And now, if you had 23 million tokens worth billions, and you decided, oh my God, this is going to fall in value, I better go and sell these very, very quickly. Would you go out and tweet this and advertise to the whole market that this is what you're about to do? No, you wouldn't, because what he's done is telegraphed to the market, the price is about to fall. And what he did, and it looks like it was totally intentional, is he announced he was going to dump his own 23 million shares on the market, or tokens on the market. And so the market collapsed for those particular tokens. It fell 90% in 24 hours. And so I remember hearing the headline at the time that Samuel Bankman Fried has lost 90% of his net worth in the last 12 hours or whatever. And everyone was kind of like, whoa, this is incredible. How is it possible? Now, is it jealousy? Is it envy? Are these guys like mortal enemies? Binance is the largest crypto exchange, and FTX was the next biggest, I believe. And so obviously competition is fierce. And so CZ thinks to himself, you know what? I can actually have a go at these guys. I can damage them, and maybe I'll sweep in and I'll be able to buy the carcass that's left. Now, one thing that strikes me straight away is that this CZ character, do you guys know the scorpion and the frog metaphor, or the fable? It's the old story about the scorpion that is trying to cross the river, and along comes a frog that wants to cross the river, and the scorpion says, why don't you give me a lift? I'll go on your back. And the frog says, are you crazy? If you go on my back, you'll just sting me and you'll kill me. And the scorpion says, I could never sting you when you're crossing the river, because if I kill you, I'm going to drown in the river. And so the frog goes, okay, that makes sense. Let's do that. And so the frog sets off across the river with the scorpion on his back. Sure enough, halfway across the river, the scorpion stings the frog. And the frog, as he's dying, says, Jesus, why did you do that? You've killed us both. And the scorpion goes, it's in my nature. Now, why am I telling you this? Well, I'm telling you this because I suspect, and I could be completely wrong now, but I suspect CZ thought he was going to do a little bit of damage to FTX and sweep in and be able to buy it up. And I actually suspect he may have killed his own business in the process. Now, I don't know. We'll have to wait and see. But the damage that he is going to do to the crypto market by this is like the Lehman moment for the crypto market. $32 billion of value has been wiped out in 24 hours. $32 billion. Now, and not just that, not just the value, but think about the damage it's done to the reputation of crypto. Everyone thought FTX was different to everything else. They thought it was the one honorable platform out there that didn't do all these kind of dodgy things. It set it back for years. So is it a Lehman moment or is it an Enron moment? That's the next big question, because Enron, those of you who are young listeners of the podcast, you may not know, you may not recognize the name Enron, but back in 2001, so 19 years ago, Enron was this massive, massive company on the stock exchange that was trading energy, and they would buy futures in energy and electricity and all this kind of stuff, and turned out to be a huge fraud. And it went under. And in the space of, a couple of months, it collapsed. It went from $90 to zero, the shares. But even it dragged down so many other companies as well. In particular, there was a huge financial auditing firm called Arthur Andersen. And this was like one of the largest accounting firms in the world. And they were caught up in this. And they had been auditing Enron's accounts and books. And what actually happened was, in the middle of the night, it came out that these guys were shredding all of the documents from Enron because they didn't want to have evidence of the kind of wrongdoing that the auditing firm had been actually part of. And that action killed Arthur Andersen, a firm that had been around for, I don't know how many, like 100 years, and was one of the big 5 firms in the world for accounting. And within about a week, that firm had dissolved and was gone completely. And all of the people, all of these partners that were used to making millions a year in income and salaries and stuff, these guys are out on the street literally looking for jobs. And so it's just incredible what happened there. Lehman Brothers, the very same thing. 2008, they went under. They had been highly leveraged, playing all these games, greed basically. And sure enough, along they go under. Somebody decided, you know what, we're not going to bail these guys out. And the knock-on impact of that nearly created the financial crisis, nearly actually dragged down the entire market. I remember at one stage in 2008, people were saying that the ATMs were going to stop spitting out money and that you should go to cash right away. And there was people selling gold. I mean, I can remember seeing these kind of advertisements, and people were selling booklets that had like little gold coins, and you could actually buy these booklets so that you could actually trade gold because cash was going to go to zero. So as it turns out, it was all a bit of an overreaction. But at the time, certainly for weeks and weeks, this is how it was playing out. It was very, very difficult time, and it's kind of hard to believe when you look back now. So companies worth billions with tens of thousands of employees, they can go bust, and they do go bust. And literally when it happens, it can go overnight. And sure enough, SBF and his FTX platform, which was worth 32 billion, in 24 hours, gone to zero, bankruptcy. Now, what's incredible is he actually came out and tweeted that everybody's money in the US platform was safe, and therefore they didn't need to go and pull any money out. And Alameda was his trading firm. That was okay. And sure enough, 24 hours later, all 3 of the firms, so Alameda, gone bankrupt, FTX.com, which is kind of the international platform, gone bankrupt, and FTX US, which is the one that everyone thought was stable, gone bankrupt. And I've just read recently that SBF himself has declared personal bankruptcy. He was worth 16 billion at one stage, and he apparently had been borrowing money against his own assets in the FTX platform, and he borrowed $650 million. And he obviously now has gone to zero with that, and so he has personally gone bankrupt as well. Now, what is causing all of this? The problem is, and this is something similar to what I talked about in the Chinese property market problems that those guys are going, is that there's tons of hidden loans, off balance sheet transactions, all of this kind of stuff is going on. And the problem is it's murky. Nobody knows who owes what, who's holding the bag when this firm goes under. And already the eyes are all turning to Crypto.com, which is another crypto entity that is now they've put withholding they've put withdrawal of your funds is now paused in there. You can't get your money out, and it's because of this liquidity problem. Now, I talked earlier, I said that I would mention this. There is a thing called liquidity and there's a thing called insolvency, and insolvency issues and liquidity issues are 2 completely separate things. And I got to know this very, very well back in 2008. So a liquidity issue is when you've got a lot of assets, a lot of valuable assets, but you don't have any cash, okay? So let's say in my case, I own, 50 properties, and they're all over, spread out all over Dublin and various places. And what's the worth of those properties? 25 million, 30 million, something like that. So I'm a wealthy guy, I got lots and lots of property. But let's say that we're going through a bit of a cash crisis. The banks' interest rates have gone up, so the banks are looking for, all of my income that comes from the rents, looking for every penny of that to go into funding the interest payments. So I've got no spare cash. And then somebody says, the roof has collapsed on my house. can you go and repair it? And I can't afford to repair it because I have no cash. The bank are taking all my cash. That is a liquidity crisis. And what happens is you're not able to pay your bills. So along comes a contractor who's gone and done a new bathroom for you or something like that. And instead of you saying, here you go, mate, the guy can't get paid because you don't have any money. And next minute he can go to the courts and basically force you to pay him. And when that happens, if you don't have the cash to pay him, what can happen is that you are basically made bankrupt. And now the problem is with this kind of situation is usually it's just a matter of time. If you can get people to calm down and say, look, I have the money, I just don't have it today. Give me a couple of weeks to sort it out, and you'll get your money. And look, here's proof. I've got all these properties. I'm worth loads of money. That's what most people were able to do. And so you don't have an insolvency problem. An insolvency problem is when your debts are so much greater than your assets that you are technically insolvent and you're unable to repay. So you sell all your assets, they won't be able to pay off your debts. That is being insolvent. Liquidity is where you have the money in assets, but you just don't have the cash today. Now, the problem is a liquidity crisis can turn into an insolvency crisis very quickly. And that is what the actions of this chap, CZ, dumping the tokens on the market, did. When FTX lost 90% of the value of its tokens, they went into an instant liquidity. They had a liquidity crisis, and suddenly it became an insolvency crisis because the value of their assets shrank by 90%. And sure enough, this had a knock-on impact. Bitcoin fell from $20,000 to $15,000 instantly. And I think there's actually going to be more to come with that. A lot of people out there are very hopeful that, crypto is going to bounce back. It'll go back to $60,000. I'd be very wary if I were you, because I think a lot more is going to play out now over the coming weeks and months. I think what I saw happen in 2008 with Lehman Brothers goes under, and then you're waiting, what's the next bank? Like, who was lending Lehman Brothers money that now can't get that money back? And so the people they owe money are going to be coming after them. And so it's going to go insolvent. And then there's going to be this knock-on impact. Everybody who's owed money who doesn't get it from the first person owes it to the second person and owes it to the third person. And there's this knock-on impact until you get to the big boys that have enough assets they can actually weather it. But a lot of the time you'll find that people they're quietly, running around trying to find a way to shore up this problem. They're not going out there saying, oh, guys, we're in big trouble. They're going out there saying everything is perfectly fine, because what they have to prevent is a bank run. A bank run is when everybody wants their cash out on the same day. This is the way it works with banks. You go down to your local bank and you put your $1,000 or euros or pounds, whatever it is, you put that in to your bank. They take that money and they lend it out, but they usually lend it out even larger amounts. So they'll lend out maybe $5,000, $6,000, $7,000 based on your 1,000 deposit. Now, they'll get all of that back in interest and they'll make their profits that way. And if you want your money, they can give it to you. But if everybody wants their money all on the same day, then they have a major problem, and that's a bank run. And this is what's happening at the moment with all of these companies. They're starting to freeze their withdrawals because they don't want... People are getting nervous and suddenly going, geez, I got to go and take my money out. So if you have money on any crypto exchange, or even if you have Bitcoin, all of these things, I'd be thinking carefully about getting your money out as soon as possible, because there's a chance that these things are just going to collapse in value. Now, could be wrong. They could bounce back next week. And I certainly saw today CZ, our friend again from Binance, he came out and said that he is going to launch an industry recovery fund. And what he wants to do is get the support of all the other guys in the space and create this fund that they can bail out their people when big firms like FTX go under. They can bail them out. Now, I'm a little bit suspect there. I don't think that is CZ being this great, magnanimous guy. He's like, oh, let's help the industry. I think he is now trying to save the sinking ship. He had a go at a major competitor, and he's overperformed in terms of the damage that he's done. And what he's actually done is damaged the entire industry and set the entire industry back probably 5 years. And so this is his scorpion moment. Like, he has got to be thinking, geez, did I overdo it there doing that? Like, I suspect what he wanted to do was to probably to humble Samuel Bankman Fried and basically buy the company up, the assets off him at, for $1 or whatever. Instead, what he did was he suddenly realized, oh Jesus, these guys are, completely leveraged up to the hilt, and there's not going to be any way that we can bail these guys out. Like, we just don't. If we buy that company for $1, we're taking on tens of billions in liabilities. So they just walked away from any kind of a rescue fund. And what are the lessons from this experience that we've gone through this last week? Well, I'm going to remind you about a video I produced about a year ago called The 4 E's. And that is the 4 E's that investors tend to get sunk by. And the 4 E's are your ego, your emotions, the economy, and events. And it's very, very, like, I got caught before by ego. But it's very clear to me that these guys, their emotions, like in particular the emotion of greed and envy, has got these guys are caught up in it big time. And the economy now has gotten shaky. And with the shaky economy, what that's done is put these guys under pressure. And all it takes is an event. And this event of SBF declaring bankruptcy, his big platform FTX going under for $32 billion. That is going to have a major impact across the market. And back on episode number 93, so we go back quite a few, like 40 episodes at this stage, I had a look at crypto, and I compared crypto to property investment, and I compared it to stock market investment. And I have to say, the amount of flack that I got from people out there that didn't like that I was, criticizing crypto. And I don't remember criticizing it too badly. I think what I did was I just pointed out the fact that there is no value in crypto except what the next person is prepared to pay you for it. It doesn't have like an inherent value. Like, if I build a house, the house costs me $300,000 to build. That's $300,000 worth of blocks and concrete and cement and wood and glass and everything and tiles and kitchens, and like, that's 300 grand. It's sitting there. Those individual items cost 300 grand. But when you go out there and say that this imaginary coin that doesn't even exist, it's like zeros and ones in a computer, that's worth $66,000. You have to, like, there's nothing to show that it's worth that other than the fact that the market says it's worth that. And if there's somebody out there who thinks it's going to go to 70,000, well, of course they're going to buy it. But when it suddenly looks like maybe it'll fall to 20,000, then people are going to start selling. And at this point in time now, there's a good chance that a lot of people with money stuck in the crypto exchanges and all of these things, they're now being locked out. They're being told they can't take their money out. And I think the whole market could kind of freeze up because of this. So we'll have to wait and see. But I think the counterparty risk is massive. I think the fact that if SPF and his platform can go under with 32 billion of debt, then the impact on the market is going to be, there's guys out there that probably had investments in FTX. They valued it on their balance sheet at like 500 million of an investment there. That's gone to zero. So you would have used that to borrow money against some other investment, or you would have made it against investments. If that goes to zero, then the counterparties to your debt come back and say that collateral is not worth anything any longer. We need you to go and put more collateral in, or different collateral. Suddenly you have to start selling assets in order to free that up because of the liquidity versus insolvency crisis. Now, suddenly that liquidity becomes insolvency. So you've got to be very careful. Final few points on this. Ask yourself, those of you who did not like hearing my criticism of crypto last year when I came out with that episode, like, look back now and what's played out in the market. Was I wrong? I think you'll probably find I wasn't too far off the point. And so you got to ask yourself, when you're in this situation And I'm not trying to pat myself on the back here. I'm simply trying to make the point that if you are too close to an investment or an idea or say a business model, you can often not see that, you're too defensive. If you're out there and somebody criticizes something and you're really defensive and you're saying you're all wrong, if you can't have a calm, discussion or like a debate with somebody about the pros and cons without getting upset about it, then maybe you're a little bit too close, and you have to kind of be careful about that. Cognitive bias. I keep going on about cognitive bias, but there's never been a clearer sort of message here, that continuity bias. Anyone who thought that the crypto craze was going to keep on going, $66,000, next it was going to go to 100,000. I can remember people saying it will go to $500,000. I can remember them saying that. And so there's a lot of you guys out there that might have wanted to believe that, and that's continuity bias. And so you think, I'm going to invest in it because it's going to keep going. You have to wonder now, with all what's going on, is that possible? I think it could be a couple of years before the market recovers from this. And back in 2001, 1999, 2000, we had the dot-com crash. And the dot-com crash was very, very similar. If you had .com in the name of your company, you were worth billions. Very, very same thing as played out in crypto. If you're crypto, you're a billionaire. If you're into crypto, there's billions to be made. It's exactly the same thing. And everyone, oh no, it's not the same thing. You're defending it too much. Just step back and have a look. Objectively, it's exactly the same thing. It's people getting greedy, people trying to make millions, and there's nothing wrong trying to make millions, but when everybody is on the same sort of party boat and they're all kind of dancing away and then suddenly realize, hey, by the way, we're sinking over here, suddenly everyone goes to one side, the whole thing will turn over. Now, confirmation bias and continuity bias. Confirmation bias is where you only want to hear the information that you want that'll support your business case. So you're out there looking for information that will support why you should stay in the market. And I can tell you straight away, I've seen that today. With this guy CZ saying that he's going to do this market rescue fund, that's somebody trying to get the confirmation bias. And sure enough, the Bitcoin price has ticked up because of that. Now, who else came out today and said something about it? Elon Musk. Elon has come out and said that Bitcoin will survive this. And I have no doubt it probably will survive it. But the thing is Elon has not exactly been the best businessman in recent times. Everyone thinks of Elon as this incredible guy. Like, I have a lot of admiration for him as an engineer. What he's done with SpaceX and the vision to kind of like get us to Mars and all that, that is incredible. What he's done with Tesla, incredible. But is he an infallible genius? No. And what he has done with Twitter, oh my God, like it's like watching a train wreck. It's to see what he's done. So in the last Friday, a little bit over a week ago, he laid off 3,700 staff. I heard today that he's laid off another 4,400 contractors that were not full-time employees, but were working as kind of contracts. It's going to be very, very interesting to see what happens with Twitter, because it seems like he's just all over the place. He doesn't have a plan. He seems to have been caught thinking that this was all very simple. And he came out with this check mark thing where you paid $8 and you get authorized a couple of days ago. And he thought this was how we're going to make millions. That is now frozen because there was an absolute, the entire Twitter universe was filled with people that were creating false accounts, and they're going out and they were imitating all sorts of big companies and sports stars and stuff. And they had the little blue check saying that this is genuinely, LeBron James. And this is genuinely Nintendo. Nintendo, the Mario guy, the cartoon character Mario from Nintendo, he was seen on the Nintendo Twitter profile giving everyone the finger. And that was a fake Nintendo account, but it had the blue check mark because the guy was prepared to pay $8. So don't assume that Elon is this genius that can make everything okay, that can fix everything. He is a very smart guy. I admire a lot of what he's done, but he is well capable of sinking Twitter if he's not careful. And people fail. Like right before Enron was down, these guys were considered geniuses. Right before Lehman Brothers went down, this guy, the Fuld, who was the CEO, I can't remember his first name, but his surname was Fuld. He was paid like $120 million that year. The board of directors thought this guy is a genius, and they paid him this amount of money. He was worth billions, and the company went bankrupt not soon after. So it just shows you. Now, question, will SBF go to prison? I actually think there's quite a good chance he will. For the guy, all of this, oh, what a messiah and everything like that, they were all saying that he was an amazing guy. He stepped down as the CEO. Who has replaced him? Only the guy that stepped in and took over the Enron collapse back when it collapsed. So this person who has replaced SBF is the same man that took over Enron after that fraud was exposed. So it's interesting to see. And the fact that SBF was coming out making these statements that your money is safe, and not even 24 hours later, the 3 companies had declared bankruptcy. So you had a couple of hours to get your money out. His tweet might have made you go, oh, it's not so bad, I'll leave my money in. 24 hours later, it's gone bankrupt. So if you look back now, we got 2000, we got the dot-com crash of 2000, we got the Enron scandal of 2001, we got the Lehman collapse of 2008, which led to the global financial crash, and now we have the crypto and the stock and the tech market meltdown. And Mark Zuckerberg laid off 11,000 people last week. Stripe, I believe, are laying off a large number of their workforce. We just mentioned Twitter. And I'm just going to finish up with this little thing about FTX. So FTX was raising money from all these big, huge funds. Sequoia Capital, which is one of the big funds, one of the big Silicon Valley funds, they put in something like 600 million or 400 million. And there's a chap called Chamath Palihapitiya, and he is this guy that's a bit of a genius when it comes to investing. And he had a look at FTX last year. And when he looked at it, he said, you know what, if you want me to invest in this, you're going to have to create a board of directors. There wasn't even a board of directors. This company is worth 32 billion and there's no board of directors. So he sent an email saying, if you want us to invest in you, you're going to have to start with the appointment of a board of directors. Sure enough, straight away, he got an answer back from the guys, and it was, go F yourself. That's what they said to Chamath Palihapitiya when he said you need to create a board of directors. I'll say no more, guys. I hope you found this one interesting, useful. If you are suffering from any losses on crypto, my heart goes out to you, but just be careful, get out. Don't be piling in thinking that this is a great opportunity. I honestly think that it could go. I think we could see Bitcoin falling below 10,000. I think more news is going to come out, more collapses. And I think Bitcoin, when it eventually reaches the bottom, will be a great purchase investment. You buy it, and then 10 years' time, you'll be very happy you did. But I think we have some more to fall. All right, folks, hope you enjoyed it. I'll see you in the next one. I hope you found this episode useful. Thank you for tuning in to another episode of Behind the Facade. If you did find it useful, I would be really grateful if you could leave us a review over on iTunes, or if you're watching it on YouTube, maybe just hit like down below and subscribe if you haven't already. If you have any questions or topics you would like to ask or have me cover in future episodes, you can approach this two ways. If you're listening in on the podcast, then perhaps join the Facebook community. It's called Behind the Facade Community. Alternatively, you can leave a comment down below. And I always like getting comments in the YouTube page because it does drive engagement. Alternatively, look me up on social media. My handle is Gavin J. Gallagher, as always. And you can stay up to date on my projects and various things that I'm doing at the moment just by following me over on my newsletter. The newsletter is found in gavinjgallagher.com. I put it out weekly. It's just a bit of an update on things that are going on and the various publications and things like that I'm putting out. All right, guys, talk to you again next week.